What if the biggest shift in artificial intelligence is not happening inside Silicon Valley, but inside an entirely different system most investors barely understand? Because when people talk about the global AI race, they usually focus on one thing: computing power. Faster chips, larger models, bigger data centers. But long-term technological leadership is rarely decided by hardware alone. It is usually decided by something far more powerful: talent. And right now, one country has been quietly building a talent machine for over 3 decades: China. More than 30 years ago, China began implementing nationwide programs designed to identify elite math and science students at an early age. Each year, tens of thousands of top-performing students are selected through competitive academic pipelines. These students often receive accelerated education, advanced technical training, and direct pathways into leading universities. Many graduates later become founders, engineers, and researchers across major Chinese technology companies. Several prominent tech leaders and AI researchers have emerged from this system, and the scale is significant. China produces millions of STEM graduates annually, substantially more than most Western countries. For investors analyzing long-term AI competition, this matters because talent supply directly influences innovation capacity, startup formation, and research output. Another major difference between AI strategies is where each region is focusing deployment. Many Western AI firms are heavily investing in advanced general intelligence research, often referred to as AGI, which aims to create highly generalized human-level intelligence systems. China, however, has largely focused on applying AI directly into industrial and commercial sectors, including manufacturing automation, logistics optimization, robotics, healthcare infrastructure, smart cities and transportation, energy efficiency systems. From a capital markets perspective, this approach emphasizes commercialization and scalable economic integration, rather than purely theoretical breakthroughs. Another growing divergence is the use of open AI frameworks. Some Chinese technology initiatives are increasingly supporting open model architectures, shared datasets, and collaborative development environments. Meanwhile, many Western AI companies continue focusing on closed proprietary systems. This difference could influence global adoption patterns, particularly across emerging markets that prioritize affordability, accessibility, and customization. Investors often watch these ecosystem shifts closely because platform accessibility frequently determines global technology adoption cycles. One recent example that attracted international attention was the emergence of DeepSeek, a Chinese AI startup that released a high-performance reasoning model developed with relatively limited computing resources compared to global competitors. What made DeepSeek notable was not just its performance, but also its transparency and collaborative research approach. Reports indicate that much of its engineering team was domestically trained, highlighting the impact of long-term education investment strategies. For global investors, this suggests that AI development barriers may be lowering, allowing smaller or more efficient teams to compete with established players. Interestingly, many leading AI research labs worldwide employ a large number of Chinese-trained engineers and scientists. This reflects how globalized AI research has become. From an investment standpoint, this means AI competition is less about geographic rivalry and more about where talent clusters, research funding, and commercialization infrastructure converge. The most important takeaway is this: technology leadership is rarely determined by single breakthrough products. It is determined by sustained ecosystem building. Countries or regions that successfully combine education, commercialization infrastructure, venture capital support, and global distribution networks often dominate emerging industries over long periods. Artificial intelligence appears to be following this historical pattern. Beyond geopolitical competition, many investors are focusing on companies that use AI to solve real-world commercial problems, rather than building foundational research models alone. One example operating in this space is Resolve AI, a commerce-focused generative AI company. Resolve AI develops specialized AI tools designed to improve digital shopping experiences, including AI-driven product search, conversational shopping interfaces, automated checkout optimization. The company operates through a software-as-a-service model, targeting enterprise retail and marketplace platforms. According to company disclosures, Resolve AI has experienced rapid revenue growth and secured substantial institutional funding to support expansion. The company has stated plans to scale global enterprise deployments, expand technology capabilities, and pursue potential acquisitions. Some market analysts have highlighted valuation gaps between public AI companies and privately funded competitors, which is an area many institutional investors are monitoring. However, valuation comparisons remain speculative and subject to market conditions, competition, and execution risks. Artificial intelligence remains one of the fastest evolving sectors in global markets, but it also carries meaningful uncertainty, including regulatory changes across multiple countries, rapid technological disruption, competitive pressure from major tech corporations, economic cycles affecting enterprise software spending, ethical and data governance challenges. No single company or country currently guarantees long-term AI dominance. The global AI economy is likely to be shaped by multiple innovation hubs rather than one single dominant player. Western companies continue to lead in foundational research and advanced computing infrastructure. China continues expanding large-scale commercialization and talent development pipelines. And emerging markets are becoming major adoption zones for AI deployment. The next decade of artificial intelligence will likely be defined by who builds sustainable ecosystems, not just who launches the most advanced models. For investors, this means paying attention to talent development pipelines, industrial AI adoption rates, open versus closed technology ecosystems, cross-border technology partnerships, real-world commercial applications. Because historically, technological revolutions reward those who scale adoption, not just those who invent first.